A hurricane just leveled your city. Your house is underwater. Your car is totaled. And your bank branch is a pile of rubble. So what happens to your money? Your accounts? Your assets? Most people have no idea. Here's the financial reality of natural disaster survival. Hurricane Katrina, August 2005. New Orleans underwater. 1,800 people dead. But here's what they don't tell you. Banks were closed for weeks. ATMs didn't work. No power, no transactions. People had money in accounts they couldn't access. Net worth intact on paper, worthless in reality. Numbers on a screen don't buy food when the screen is dark. Hurricane Maria, Puerto Rico, September 2017. Power grid destroyed. Banks closed for months. Credit cards useless. Digital payments fantasy. Cash was king. But most people didn't have cash. They had bank accounts, retirement funds, investment portfolios, all inaccessible. You can't eat your 401k when ATMs are dead. Hurricane Ian, Florida, 2022. 150 billion in damages. Insurance companies overwhelmed. Claims took months. Meanwhile, mortgages due, rent due, bills due. Your house is destroyed, but your payments aren't. The financial obligation survives even when the asset doesn't. So let's break down exactly what happens to your money when a hurricane destroys your city, phase by phase. Phase 1. The first 72 hours. Cash is everything, else is nothing. Hurricane hits. Power goes out immediately. Cell towers down. Internet dead. Suddenly your entire financial system is offline. Can't check balances. Can't transfer money. Can't use cards. Your digital wealth just became digital fiction. People who survive financially have physical cash at home, not in the bank, at home, in a waterproof container. Because that cash works when nothing else does. Stores take cash only. Gas stations take cash only. Cash is the only functioning currency in disaster zones. How much cash? 1 month of expenses minimum. 3 months better. Banks stay closed longer than you think. Katrina, some banks closed for 6 weeks. Maria, 3 months. You need enough to survive until the system restarts. Eventually is too late if you starve this week. Small bills matter, 20s and 10s, not hundreds. Nobody has change after a hurricane. The store owner selling water for $20 can't break 100. You either have exact change or you don't buy. Phase 2. Week 1. The banking system is broken, but your obligations aren't. Power's still out. Banks still closed. But your mortgage payment is due Friday. Your car payment is due Tuesday. Credit card bill due next week. The financial system doesn't care that a hurricane just destroyed your city. Due dates don't change. Penalties don't pause. Interest doesn't stop. This is the trap. People focus on survival. Food, water, shelter. Correct. But they forget financial obligations continue. Missing payments destroys credit. Triggers late fees. Starts foreclosure. Your house is underwater literally and financially. Contact your lenders immediately. Before the disaster, if possible. Most have disaster forbearance programs. Mortgage payment delays. Loan deferrals. Credit card grace periods. But you have to ask. They don't volunteer this. But here's the problem. Phone lines are down. Internet is out. Cell service is dead. How do you contact them? You can't. Which means you needed to contact them before the hurricane hit. When you saw the forecast. That's when you call. Before disaster strikes. After is too late. Phase 3. Week 2 to month 1. Insurance becomes your new full-time job. You start filing claims. Home insurance for the house. Auto insurance for the car. Flood insurance if you had it. Most people don't. Flood insurance is separate. Your homeowner's policy doesn't cover flooding. Read that again. Hurricane flooding destroys your house and your insurance pays nothing. Zero. After Katrina, thousands discovered this. Their homes destroyed by flooding. Insurance denied every claim. Not covered. Policy excluded flooding. People lost everything. Generational wealth gone. Because they didn't have flood insurance. Because they assumed they were covered. Filing claims is brutal. Insurance companies overwhelmed. Thousands of claims simultaneously. Not enough adjusters. Your claim joins a long queue. And while you wait, you're paying for temporary housing. Paying for food. Out of pocket. For months. Until the claim processes. If it processes. Document everything now. Before the hurricane. Photos of your home, videos of your possessions, receipts for valuables, serial numbers for electronics. Because after the hurricane, the evidence is gone. The insurance company says prove you owned it, prove its value. You can't. No documentation. Claim denied. Phase 4, month 1 to 6. The long financial grind begins, powers back eventually. Banks reopen eventually. You can access your accounts again, but accessing accounts doesn't solve problems. It reveals them. You see the damage, the missed payments, the late fees, the dropped credit score, the penalties that accumulated. Your income is disrupted. Your job is gone. The building where you worked is destroyed, or your employer relocated, or your clients disappeared. Hurricane doesn't just destroy property, it destroys income streams. And income takes longer to rebuild than buildings. This is where people go broke, not in the hurricane, after. They survive the storm. They survive the immediate aftermath. But they can't survive 6 months of reduced income with full expenses. The math doesn't work. Savings drain, credit cards max out. They borrow from family. Then they default. Emergency fund is critical. 6 months of expenses. In cash or liquid assets, not invested in stocks. Not tied up in retirement accounts. Liquid. Accessible. Available when you need it. That emergency fund is the difference between surviving and defaulting. Phase 5. Month 6 to year 2. Financial recovery or financial collapse. Insurance finally pays. Maybe. If your claim wasn't denied. If you had the right coverage. If you documented properly. If you fought the adjuster. You get a check. Months late. Probably less than you claimed. But something. Now you rebuild. But rebuilding costs more than the insurance payout, always. Materials are scarce. Labor is expensive. Contractors are overwhelmed. Prices surge. That $200,000 insurance check rebuilds a $300,000 house. You're $100,000 short. Where does that come from? Savings if you have them. Loans if you don't. More debt. Some people never recover financially. Katrina displaced thousands permanently. They moved to new cities, started over, declared bankruptcy, walked away from destroyed properties that still had mortgages. The house was gone, but the debt remained. They chose bankruptcy over decades of paying for nothing. Here's what most people don't understand. The immediate survival is hard, but the long-term financial survival is harder. Because disasters create cascading financial failures. Lost job leads to missed payments. Missed payments lead to damaged credit. Damaged credit leads to higher interest rates. Higher rates lead to more debt. More debt leads to default. One hurricane destroys your finances for years. So how do you prepare financially for hurricanes? You start now. First, physical cash at home, 3 months of expenses. Waterproof container, safe location. Second, flood insurance, even if you're not in a flood zone. Hurricanes flood everywhere. Storm surge travels inland. You need flood insurance. Get it now. It has a 30-day waiting period. You can't buy it when the hurricane is coming. Third, document everything. Photos, videos, receipts, serial numbers. Store copies in the cloud. Email them to yourself. Multiple backups. Your documentation proves your claim. Fourth, emergency fund. 6 months minimum. Liquid. Accessible. This fund saves you when income stops and expenses continue. Fifth, contact lenders before disaster hits. Arrange forbearance early. When you see the forecast, you call. You don't wait until after. The systems are down and you can't reach them. Sixth, evacuate with financial documents. Birth certificates, social security cards, insurance policies, bank account information, property deeds, waterproof bag. Take them when you evacuate. Replacing these documents takes months. You need them immediately. Here's the brutal truth. Hurricanes don't just destroy property, they destroy finances. Your money doesn't disappear, but your access to it does. Your income stops. Your expenses continue. Your obligations survive even when your assets don't. Most people are completely unprepared. The people who survive financially aren't lucky. They're prepared. They have cash. They have insurance. They have documentation. They have emergency funds. They have plans. And when the hurricane hits, they execute. While everyone else panics and goes broke, the prepared people rebuild and recover. When they ask how you survived financially when the hurricane destroyed your city, you don't explain all the preparation. You just tell them you were ready, because you were. And they weren't. Hurricanes destroy cities. But financial preparation determines who recovers and who doesn't. Be the one who recovers.